And in our top business story, China was Dubai's top trading partner in the first half of the year, with a trade value of 80.5 billion dirhams, as Dubai's foreign trade for the period reached 654 billion dirhams. The figures show a fall of 3.7% compared to 679 billion recorded last year, H1. Imports for the first half of the year had a share of 408 billion dirhams, while exports had a share of 59 billion and re-exports 187 billion, as according to a statement from Dubai Customs. Phones and PCs scored a 17% share of the total value for the period. The trade of phones amounted to 85 billion dirhams, up 11% compared to H1 2013. China was the top importer of phones to Dubai with a value of 27 billion dirhams, while Saudi Arabia was the main market for phone re-exports with a value of 8.5 billion dirhams. Computers recorded a 9% growth at 27 billion dirhams, while Dubai's automotive foreign trade also climbed 31% from 24.3 billion dirhams to 32 billion. Petroleum oils trade grew by 31% to 20.5 billion against 15.6 billion dirhams, while the upturn of real estate saw the growth of the air conditioning sector by 53% to 3.6 billion dirhams against 2.4 billion in H1 2013. DP World has announced a 26% rise in net profit for the first half of the year, of $332 million from its global portfolio of marine terminals. The net profit for the global marine terminal operator for H1 is up from $264 million in H1 2013, while revenue for the 6 months ending June the 30th was $1.66 billion, up from $1.51 billion a year earlier, delivering an 11.6% like-for-like revenue growth. Additionally, the company's consolidated throughput in the first half was 13.9 million 20-foot equivalent units, up 8.5% from a year earlier. DP World's chairman, His Excellency Sultan Ahmed bin Sulayem, stated that the addition of new capacity and a pickup in global trade has resulted in a return to robust volume growth. He added that by 2015, DP World expects to have about 85 million TEUs of capacity globally, including ports in which the company does not have full control, and more than 100 million TEUs of capacity by 2020, subject to market demand.
We have once again delivered solid results from our global operations. Profit attributable to owners of the company grew to an impressive 25.8% on a reported basis and 40.8% on like-for-like basis at $322 million. These results were achieved on the back of solid throughput growth in the first 6 months of the year and illustrate that a portfolio focused towards faster growing markets and origin and destination cargo continues to be the right business model to pursue. The substantial investment program that we initiated in 2012 is starting to bear fruit as the new capacity drives throughput growth and in turn financial performance. We have made good progress at our 2 recently opened facilities, Port in Brazil and DP World London Gateway in UK. We remain committed to investing in both emerging and developed markets, and we will deliver 8 million TEUs of new capacity over the next 2 years. Jebel Ali is set to open 2 million TEUs of new capacity in the last quarter of this year and further 2 million TEUs in the first half of next year.
Telecoms operator Du is accelerating its rollout of 4G as demand for fast internet speed grows, helped by rapidly rising smartphone sales. According to local reports, the company stated that it would grow its 4G LTE network by 25% beyond its original expansion plans for this year, as Dubai aims to become a smart city. The high-speed 4G LTE technology offers better connectivity for people who want to stream video on their phones, use VoIP applications, or need faster download speeds. Analysts say that the high level of smartphone penetration in the UAE market is the main driver behind Du's network expansion. For the first 3 months of the year, 52% of the handsets registered in the UAE were smartphones, up 10% compared to the same period in 2013, that's according to the latest government statistics. Emirates Airline has signed a memorandum of understanding with Nigerian Arik Air, West and Central Africa's largest airline, in order to develop and expand their existing commercial relationship and explore further areas of cooperation. Emirates and Arik Air currently have a one-way interline agreement whereby Emirates passengers are connected throughout Nigeria and West Africa via Arik Air's current domestic and regional network. The two airlines will explore other areas of cooperation for the future, including frequent flyer programs, passenger and cargo handling.